Good evening and welcome to this webinar in association with Tickmill. Myself, Charlie Burton, and I'm going to be talking to you over this next hour or so, or maybe a little bit less, about how I made 573% swing trading FX on a trading challenge that I've been doing over the last few years. If you don't know me, I'm Charlie Burton. I've been trading 27 years now. I'm a professional money manager as well as I manage my own money, but I'm also regulated here under the FCA to manage funds. And so I manage a few different funds here in the UK. And like I said, I've been trading for quite a long time. I don't day trade anymore. I used to. I've won back-to-back 5 years undefeated at the London Forex show. Live trade-off at the London Forex show. So I've done quite a lot of stuff like that. I've even been on the BBC. Some of you like the TikToks, yeah. I've been on the BBC in a documentary called Traders Millions by the Minute. That was a few years ago, and I've been interviewed for the likes of the Financial Times and all the usual broadsheets and the likes over the years. I think that's probably enough on me. So I've been doing this for a while. Now, this challenge, in fact, before I go any further, I'll just read off the disclaimer in association with Tickmill here, because this webinar is put on by Tickmill, and I would highly recommend them to you. If you don't currently have an account with them, I would recommend that you do. They're a very good broker. They've got great spreads, great execution, great range of products and services. So I'd highly recommend using Tickmill as a preferred broker. But by all means, as I would always say, yeah, if you don't currently have an account with them, do your own research, but they are very good. I've had very good experience of dealing with Tickmill over this last couple of years that I've been dealing with Tickmill myself. Okay, so the risk disclaimer is the material provided is for information purposes only and should not be considered as investment advice. The views, information and opinions expressed in the text belong solely to the author, that's me, and not to the author's employer, organization, committee or other group or individual in the company. they're not my employer, but this is a standard statement there. High risk warning: CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 75% and 74% of retail investor accounts lose money when trading CFDs with Tickmill UK. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. Okay, so we have to go through the risk disclaimers there before going through anything more in the webinar. So do check out Tickmill if you don't currently use them. They are well worthwhile doing that with. Right. So the story of this trading challenge is that I started the trading challenge. I've just got a chart up of the euro dollar here because a lot of my trading during this challenge has been on the euro dollar. The challenge started in June of, oops, that's way too thick, isn't it? So let's change that. Okay, June of 2020. Okay, so that's when this challenge started. I like doing these trading challenges. I've been doing them on and off for the last decade now. My very first trading challenge I did was a 10k to 100k challenge. That took me 2.5 years to do that. This current challenge was slightly different. So what I wanted to do was start with a slightly larger account. Now, I appreciate that people are based all around the world and trading with all sorts of size of capital, but just a little bit bigger. The 10k, that was $10,000, so around about £8,000. So the $10,000 to $100,000 challenge was one. This challenge, I thought, well, I'd start it a little bit higher, at 20,000. And really with the goal to try and turn it into 70,000, which would then clear a a 50,000 profit. That was the idea. That was the original goal for this challenge. So I'm going to go through the statements in a bit, but I'm just going to go through how I've approached this challenge first and foremost, the overall methods that I've been employing, the markets, as I've already just alluded to a little bit here, the markets and why those markets, all the reasons and rationale for the trading activity, the style of trading that I'm using as well. So that's what I'm going to go through first, and then we'll go through the statements itself. But this was the challenge that I set myself, just to see if I could turn 20,000. No time limit on it on this one. No time limit, just 20,000. See if I can turn it into 50,000 to clear a 50,000 profit, which and 200 odd percent, 250% return. Could I do that? Okay. And the thing is, when you do these challenges, I do them in real time. I'm still involved. I'm still doing this challenge to this day. You'll be pleased to know. So, and it will continue. So that was the original challenge. And now once I've got it up to the account up to 70,000, I thought, well, I might as well carry on doing this challenge and let's just see how it goes. And so, I'm still doing this challenge to this date. I last did this update that I'm going to be showing you here this evening in December. So just a couple of months ago, it was when I last updated to the wider audience out there. So I'll next be doing an update for 2024 in December of this year. So what I'm showing you this evening is what I actually showed in December. So right the way up till December's when I did a webinar in December. So, but I'm doing this specifically for Tickmill here. Okay, I think I've answered the questions of where did the challenge come from. So that was the reasons and the rationale for doing a challenge, just to show traders what can be achieved. All right. Now, like I've said in the past, I've done a lot of day trading in years gone by, but that's not really what I do now. As you get older, sometimes you think, well, actually, I don't want to be in front of the screen with the same level of intensity as I used to. So this challenge is, and the returns are all from swing trading. Okay, they're all from swing trading. So that's holding positions from anything from a few days. So let's just say from 3 days through to anything up to really 3 months is the time frames that I'm generally, and everything in the middle is what I'm trading over. So that's the sort of time frames I'm trading over. So the current return, as you know, as of December of last year was 570 odd percent. I'll show you the statements in a bit. And so how have I generated that 570% over those, what's that, over 3 years there? 3.5 years, is that 3.5 years? So in my book, it's a decent return. It's a solid return. And so I'm going to show you, what I've done there. But first, before I go through the chart, I'm actually going to bring up a Word document before I go onto the chart. And I'm just going to list out just a few of the main concepts, the core concepts that I use in order to trade and approach the market. So the first one is multiple time frame analysis. Okay, so that's the first thing that I use is top-down approach. Multiple time frame analysis is one of the first things that I do before I take any trade. It was always the same when I used to day trade years ago. I'd want to look at the higher time frames first and then drill down to the time frames that I might be executing off. So it's exactly the same sort of principle, but when I'm swing trading, I will go out to weeklies, monthlies, and quarterly time frames. So I'll go right away out to the quarterly chart. Well, usually I start at the quarterly and I'll work my way down. So top down, multiple time frame analysis. Another big one is sentiment analysis. Now, there's not, and so what I'm looking for when I'm looking at sentiment is extremes in sentiment. Now, sentiment can be measured in many, many ways, and I'm going to give you some examples during tonight's webinar of where I was trading and using sentiment. So sentiment is another important part of my trading, but it's not there all of the time. There's not always extremes in sentiment, just all of the time. So, but at certain times, then there are, and it can be really useful. So I'll show you some of those examples as well. So sentiment analysis is really important. But on a day-to-day basis, we can use sentiment. We can look at what retail traders are doing. We can look at what the large speculators and hedge funds are doing as well in the futures market. So we can get a gauge of short-term sentiment, but also we can look at big picture sentiment, what's going on in the big major publications like the likes of your Economist magazine, Reuters, Bloomberg, all of that stuff, all of those reported articles that do come out from those news sources are really useful as well. So I'll go through some of that here tonight as well. Of course, there's the macro. So the macro environment is important. What news releases are coming out, especially with trading Forex, highly sensitive to economic data releases from the likes of the US, Europe, and the likes. So that's something which is used as well within all of that. I can use sometimes short-term sentiment actually along with macro. So that's important. One of the biggest things that I use is this. Adding to winning trades. This webinar is being recorded. Yes, it is, Aidan. Yes. Adding to winning trades. So that's one of the big factors of my overall profitability, is adding to winning trades. I'll tell you a brief story. I was talking with a boutique broker well over 15 years ago, maybe 20 years ago. Maybe not quite. I think it was probably about 18 or 19 years ago. And at the time, I was considering using them. They were a boutique broker who dealt with really small hedge funds and money managers. So anything up to sort of 20 million really that was being managed. So they wanted me to manage some of the money that I was trading with them. And anyway, I was having this conversation with the owner of this small brokerage at the time one day, and I said, what's your who's the most successful traders you've ever come across? Or I didn't want to know individually, but what are their traits? What are the traits of the best, most successful traders that you've seen in your experience over the years? Because he'd been around for a long time. And he said the best traders, he said, that I've ever seen are those who, when they get into a trade, they will milk it for all it's worth, for all they can. So they will try and hold on to the trade for as long as they can, and they will add into it as it goes in their favor. Now, at that time, that wasn't something that I was doing, and I didn't immediately, leave that conversation and think, oh, I must do this. It was actually several years later that I actually started to do it myself. So it's funny how these things happen. But I still nevertheless remember that conversation. And so coming back to my point here about adding to winning trades, a large part of my profitability is the fact that I will add to the winning trades as they move along so that they can exponentially grow. If the trend continues, then I will make way more than just taking a standard trade and then just running it to a target, because I will be adding to that position, my positions along the way. I will go through adding to positions this evening. I'll come back to it, but yeah, we will go through that. And then lastly, of course, let's call it entry. Yeah. Now, hopefully you may have noticed something here. So I've just put, and then we've got the strategies that I use or / entry techniques that I use. Now, one thing you may have noticed is that these have come last on my list. What I find in my years now of decades of experience is most traders spend an inordinate amount of time trying to perfect or find the holy grail of strategies, entry techniques. As you've seen, this is actually comes fifth on my list. So, and isn't it funny? We all know that statistically something like 80% of all traders will fail. Yeah. And yet, what is it that probably 80% of those traders are doing? Chasing the holy grail of trading strategies. Okay. So for me, of course, I still have to have entry techniques and strategies to get me into the market. But that comes after all of this stuff that I'm really looking at. The multiple time frame analysis, sentiment, macro, at least anyway. Adding to the winners obviously comes after I'm into a trade. But what I'm trying to say here is that doesn't come first. Most people are looking at this stuff first, and that comes further down the list for me. Okay, so these are the main concepts that I'm using within my trading. Okay. So what I'll now do is come over to the charts, and I'm going to talk through this this period. Before I go to I'll have a look at the statements itself, but I'm going to talk through this whole period of trading since I started in this challenge in June. So it would have been around about here somewhere around about here of 2020. That's when I started this challenge. So just a bit after the world went crazy with COVID, of course, and just a couple of months or so before that. And so it was right in the middle of, many of us being locked down or whatever. So let's talk through this. Okay. Most of my trading, but the majority of my trading, is not all of it, but the majority of my trading is undertaken on the euro-dollar currency pair. It's the largest currency pair in the world and most liquid, of course, for that reason. Essentially what you're doing if you're trading the euro-dollar is you're essentially trading the dollar index. The euro makes up nigh on 60%, close to 60% of the basket of currencies that are traded against the dollar index. If I inverted a euro-dollar chart, then it would look like the dollar index itself. Very often the euro-dollar just looks like an inverted dollar index. So essentially what I'm doing is I'm trading the dollar index essentially. Don't get me wrong, I will trade other major currency pairs. I will trade the S&P, the NASDAQ. I will trade other markets, but 90% plus of my trading is the euro dollar. So I've got this on a weekly time frame here, just so that I can squeeze all this data in a nice enough format onto this chart. So all I've got on this chart is just a 50 period moving average, my black line here, and in the lower window I have an MACD. So I do like the MACD indicator. I use the MACD indicator for things like divergences. Okay, in the main, that's what I will use the MACD indicator for. So starting in this period of coming into 2020, what was quite interesting, actually, I do need to squeeze this back a little bit, because what hopefully you can see through 2019, going into all that volatility as COVID all kicked off, was that overall, looking at my MACD lines down here, there was a huge divergence on this weekly time frame. So that was the first thing that I'd been tracking over that prior period coming into 2020. Then we broke up here this was in the spring, so about April, May. I was here, so it's a little bit earlier because I'm on a weekly time frame. So it was we had a break up here. The challenge didn't start until the June. But I'd personally already been trading the long side prior to that. But the challenge account didn't start until the June. So I wanted to be on the long side of the euro dollar, following those huge divergences as I've shown there. So I was looking for more upside here. So I started, in the challenge buying the euro dollar. Now, one thing I must emphasize is that, yeah, okay, no problem, Mohammed, is that my win rate, my actual win rate is relatively low. Okay, so it tends to be, it depends on the time of year and what's been happening, but I would always put it between 30 and 40%. So I'm not, and yet still making over that time frame 570%. So I'm not interested in high win rates. I'm just interested in ultra high risk to reward ratio trades. That's all I'm looking for. That's what I'm putting it all together, all that data, all that analysis together for, is to get me the ultra high risk to reward ratio trades, where I get to add into it as well. And those are what deliver the returns. I'm not trying to be right all of the time. I could do it by just banking my profits a lot sooner, but I wouldn't be as profitable. So I'm looking for the most profitable way of approaching the market for me, and using the style I have. If I bank the profits too regularly, too soon, I wouldn't be as profitable. I wouldn't generate that return. So as a result, the longer the longer you hold on to a trade for, the lower the win rate, because the more likelihood is that it will roll back over. Okay, the longer you hold, it'll only be the few that just keep going and going and going and going. Okay. Oops. So coming into 2020 here, I wanted to be on the long side. So I was buying, but of course, I'm not always right, as I've just said. So I'm still going to have, quite tight stop losses at times because I'm using multiple time frames. I will still take trades off of 4-hourly charts, even hourly time frames. But I'm always using those to then get me in on a trade that might hopefully develop into a swing trade. So like I've just said, with the win rate, there's plenty of trades that I will get stopped out of. In fact, when I started the challenge, I went straight into a drawdown immediately. The 20,000 dropped immediately to sort of 19,000 and something like that. So, but that's just Murphy's Law. That sort of thing's always going to happen. You start a challenge, right? Okay, let's see how we get on. Oh, no, went almost immediately into drawdown. But then it came up. And so as the euro went up and I managed to get more positions in the direction of travel here, so I rode the euro dollar going right away into the December of that year. I was lucky that year. It was one of those years where I didn't put many feet wrong. Where I got in, roughly speaking, was all right. I was still having some stop outs, but I managed to capture that move there. This consolidation here, I used to, so I banked profits in the July here, used this pullback consolidation to start accumulating more positions and to take me into the end of the year. So I had a target at 123, which was right up here. That was based on the multiple time frame analysis. What was interesting, what was fascinating as we came into the end of that year was that from a sentiment perspective, the big financial news outlets were all calling for more dollar weakness. So when you get the likes of Reuters and Bloomberg and elsewhere, and you're seeing articles talking about, oh, that's it, it's the demise of the dollar. And that was what we were seeing, headline articles. I haven't got any saved. I didn't save any at that time, but I've got others to show you. There was a lot of articles coming out into the sort of November, December of 2020 talking about the demise of the dollar for 2021. Now, when you start seeing lots of headline articles like that, you have to look the other way. You've got to then start to think, maybe we're at the end of this trend. So there was other reasons there for me to, from a sentiment perspective, to want to get out, and not only get out, but actually also to short. Now, what was interesting up here, so yes, I started shorting into that first quarter of 2021, right away down to my 50-period moving average. Down here was my target. So again, I couldn't put a foot wrong for a while. We had this divergence here. You can see these lower peaks. See my blue lines here, which is the MACD line itself. Between that peak there, so we'll call that 1, and this is number 2 over here. There's 1 and there's 2 there. So not only do the euro had got up into that technical zone that I was looking for anyway, around the 123, I think it went to 123.50. We had all of that uber bullish sentiment, which raises a warning flag when everyone's saying the same thing. You've got to think, maybe we're nearing the end of this trend. Plus we had divergence here on the weekly time frame. So I shorted into that first quarter of 2021. So you're thinking, right, okay, Charlie's on a roll here. And I was. I had a really good 2020 and a really good start to 2021. But I'm always very open and honest about, where I make my money and where I lose money as well, because that's the realities of trading. If people tell you they make money all the time, you have to sort of take it a little bit of a pinch of salt, because everybody loses money as well as making it. So that's where I got into there. Then down at this point, this was, I use moving averages quite a lot in my trading. So when the euro dollar came down to this 50-week moving average, fun enough, on the daily chart, there was a divergence going the other way. I think off the back of my head. And so I started buying down here. Might have been on the 4-hour chart, actually. So you're thinking, wow. Now, so I was buying here, doing my usual, adding to the winner as it started coming up. Then I started adding to the winner here, like I add to my shorts as they were coming down and the previous longs as they were going up. So I'm doing the same thing. And I had a target up here, just that little bit higher. I think it was at about 120.23 again was my first target. Then I had another target beyond that. And it got to really close to 123. Didn't quite get there. And then it just rolled over. And the thing with one of the downsides to adding to winning trades, because whatever style of trading you have, there's going to be, the good elements of your style, and there's going to be the drawbacks of your style, whatever your style is. Okay, so if I'm adding as it's coming up, I'm having to trail my stop up in order to justify the add-ins, and then of course that brings up my average price as I'm adding in. So that's all fine all the time. It carries on trending up. But if it pulls back and does a deep pullback, I'm going to get stopped out. And so that's what happens. So I'd been in a trade for a good couple of months there, and I need to get nothing from it. Okay, fair enough. So made no money there. In fact, gave wherever the open profits were, they all came back. Stuart, what are the 9 other indicators not shown? Oh, he's talking about over here. They're moving averages, Stuart. I've just taken them all off just to keep the chart nice and clean for you. So it's just moving averages. Yeah. So I use a multiple of moving averages. Right. So then the euro started to roll over. I was looking for it to come up that little bit more. It never quite did it, like I said. Then it started to roll over. So I let it roll over. And really, I didn't start meaningfully shorting it until the September of 2021. But then between September of 2021 and the lows of 2022, I had about, in total, 7 major, I say major, but yeah, major profitable trades. Now, what did I say earlier on? I'm only looking for those those bigger winners where I get in, have a really nice run, build the position a bit, add to the winners, and then hit targets, trade done. So in that entire period from the September of 2021 down to about a year later, I had about 7 major profitable trades. Everything else was losing trades, getting nicked out of trades. Some trades would be just very small wins where you trailed your stop and then you just get trading stopped out. So, but I'm just underlining, it was only about 7 major trades. The point I'm trying to make is you don't need to have lots and lots and lots of winning trades. If you get into trades and you don't just bank your profits too soon, you get those ultra high risk reward ratios, then you can do very, very well. Thanks very much. So for me, where did I make the bulk of my profits? Yes, it was in the September time when we first broke down through here and I had a run there. Then we had a consolidation through for about 2 months or so here where I just lost money. And then when I say lost money, of course, there's risk management going on. I use stop losses and risk a certain amount per trade, but I wasn't making any money through that period is what I'm saying. So then we had this drop here. So I would have, I caught most of the downdrafts, the majority of the downdrafts I caught through 2022. There was one that I missed because I was on holiday, and that was this downdraft here. So I missed that one, and then I caught that one there, and then that one there. So, well, that's saying 6, but I think it was probably about 7 trades overall through that. So just going with the trends and using breakdowns in price. So my overall analysis, my top-down analysis was looking for more downside. And then I was using, in conjunction with the top-down analysis of the higher timeframes, the quarterly charts and monthly timeframes, then looking right away down to the daily charts and 4-hour charts for entering positions. And that's all I was doing, is looking for breakdowns on the likes of the 4-hour charts and daily charts. Once price would consolidate and then start rolling over, then that would give me my next entries. And I can go through the specifics of some of the entry techniques that I use in a bit, but that's what I was using through there. I'm just doing this this high level approach first of all before we go any further. Just talking about where, what I did and where I've made the money on the account over this period. Then we got down to this was a fascinating period as the euro dollar got down to these lows in the late September, early October of Aidan. No, this is not a monthly chart. This is a weekly chart. So no, I use multiple time frame analysis, Aidan. Maybe you come to it late, or maybe you came to the presentation late, but I've already, I use the top down multiple time frame analysis. So I don't use a singular time frame. Most of the trades I'm actually executing off the lower time frames, dailies, 4-hourly charts, even down to the hourlies at times as well. So what was interesting down here is we just had, a 15-month fall in the euro dollar. And as the euro came down, the euro dollar contract got down to parity, first of all. So it got down to 1, then came all the way down to like 95 or so. Now, that 95 level was quite an interesting level, because if I go back to the early 2000s, the euro launched in 2002, and the high, it's not showing it on this chart, but of when it launched, I think it was 2002 at the time, matched in nicely with this low here. So, in fact, why don't I just take you to the monthly chart and make it a bit easier on myself? There we go. Right, now you'll see it. Maybe it was 2000. Sorry. Yeah, there we go. So we got that high there coming in with this low here. Okay. So, but not just that, also going way back before that on the composite chart. there was this low here as well, which came in the same level. Okay, about 95 or so, 95, 96. Now, of course, 1989, sorry, that was. Now, of course, that's a composite price. The euro didn't exist back then, but it was but that 95, 96 zone was a really important level there. So if I take us back to the weekly charts, and as we came down into that zone, what was fascinating, if I bring up from a sentiment perspective, what were the articles looking like at that time? Well, on Bloomberg Business Week, we had this article saying, can't stop, won't stop. The Fed has turned the US dollar into a wrecking ball and there's no end in sight to the carnage. If I zoom in a little bit more, you'll see that that article was dated the 3rd of October, the 3rd of October of 2022. Well, the euro had already bottomed on the 28th of September. There you go. Sometimes the timing of these articles is uncanny. So the euro had bottomed on the 28th, and we were seeing a lot of articles like that. And so, again, from a sentiment perspective, really fascinating. So, so I started trying to get long because I knew we had this massively negative sentiment now. We had big reversals. We had a key reversal. If I go to the daily chart, and if I can zoom us back or scroll us back here, there we go. Sorry for all the movement here. Big key reversal bar on that 28th of September itself. And the euro, although it chopped around for a bit, ultimately it never went lower. And so we had that combination of multiple tiered support down at that price zone down there, massively bearish sentiment, and then big reversals like this this key reversal bar there as well. I'm just going to take us back to the weekly chart now. There we go. So then rode the upside, taking, you know, realistically, it was the bulk of the gains were from about November through into, I can't remember, into the December actually. Well, I rode to other trades into the early part of 2023. Now, what was fascinating coming into 2023 then was the euro dollar started to chop a bit. So it did this pullback here. I then got long. I was trying to get long through here, so had a nice run through into the April time, I think it was, and then it rolled over. Of course, I've been adding to my positions like I always do. If it hasn't quite got to my targets, which it didn't, it rolled over. I got stopped out. Make no money through that period. Got long again through here. Did hit some targets up around the 112 mark. So, yeah, okay, banked some profit. But again, been adding to the position. And as it rolled over, just got stopped out on the rest. Okay, so then what had actually happened was that we diverged again. So that same divergence pattern that I showed earlier was going on between this point here and this point here. So once it starts rolling over, I know we've got the divergence pattern in place, plus what was going on from a sentiment perspective at that point. Well, yet again, we now have sentiment in the other way. Strong dollar remains the only game in town. 5th of October, 2023. Oh, sorry, that's not there. That's not at that point. That's down at this low. Take that back. So we had that divergence. I ended up shorting off of that and having a couple of months of downside. Again, adding to the trade, and then taking the profits down in this zone down here. And like I've just said, and it was fascinating because we had this three-month pullback, only to then see this sort of sentiment, as I was just showing, right into the 5th of October of last year. Strong dollar remains the only game in town. Where did the euro bottom? Somewhere around there, I think it was. I can't remember the actual date if I go to the daily chart, but where was the low? The 3rd of October. There we go. So again, I'm looking, when I start seeing those sorts of articles, and we had divergences again down in this zone, I'm going to start looking the other way again. So then I got long in that, right around that October lows area, because we had technical reasons to be buying, divergences into technical levels, and then we had all that sentiment there as well. What I think has been interesting now, funny enough, then the Euros had this great run into December, and then just pulled back into 2024, just over this past six weeks or so. So again, my trade, I built the trade up, and then it's just rolled over. Okay, c'est la vie. So, but like I've shown, I don't need lots and lots and lots of winning trades. Don't need that. Doesn't matter. I only need a few, and that's all I need. Most of the time through this three years or so, the win rate, as I said, overall will be, is in that 30% to 40% range. But I will be more profitable looking for my style here, looking for those trades, adding to the positions, and putting up with the times when they just roll over. I've been doing this for 27 years now. I have a thick skin towards losing trades. I know, and I appreciate many traders don't. You don't have to, and you certainly don't have to trade this way. But what I'm here to show you is just to give you some thoughts about holding on to trades more. If more traders held on to their trades just a bit more, they would be more profitable. Yes, they might have to sacrifice win rate, but they would be more profitable. I'm an extreme, really, because of the way that I will want to hold my trades for significant periods. When they work, they make me significant profits, but I have to put up with all those other ones that just roll over and stop me out. So you may say, do you know what? I don't want to trade the way that you do, Charlie, and hold on for as long as you do, but I'll add in a bit. So let's go to adding in to winning trades. So before I come to the statements here, now, a very, very simple way of approaching adding into winners is whatever your technique is. So if you've got an entry at this point here, here's your entry and your stop loss, because of course you should all be using stop losses, unless you're trading unleveraged, it's a bit different. And your stop loss is down here. So price starts moving up in your direction for you. So it's only once you're in a position to move the stop loss up on your first entry. So this is entry 1 here. It's only once you can move the stop up on your first entry that you're then in a position to say, right, okay, I'll now use a consolidation, pullback, whatever, to add a second entry, entry 2. But only once the stop on the original entry has been moved up. So this is a nice beginner way of looking at adding to your winners. So you don't have to have loads of add-ins, but if you've got a target, let's say is up here. So let's say this is your target. Your target price is up here. Rather than just having your entry here and then just sitting on the trade until it gets to the target, at least entertain the thought of, well, once it's got maybe halfway to my target and my stops at entry at break even at entry now, I can, if I want to, look at adding another entry. So rather than maybe having a, for argument's sake, a 3R trade, which is a lovely trade as it is, instead of it being a 3R trade, it could end up being a, let's say a 5R trade, or maybe a 6. So, and you only need to put one add-in in. And and that's just a beginner way of looking at it. So only once your stop on your original entry is moved up can you then say, right, I'll use another entry technique if I get one to get me into another position, and I'll add another position here. Now, the problem that a lot of traders have is that they don't want to. Once psychologically, once they've moved their stop to break even, they don't want to now put more risk back into the trade, because it's like a relief that their stops at break even now, and they don't want to take a new trade. I get that, but that's the road less traveled. That's where the more profitable trades come from, is being able to actually say, oh, I know my stop's at break even, but actually I'm going to have to now put another entry on, and obviously this one will have an exposed, a stop loss on it itself. But if you can get your head around the psychological point of, okay, stops at break even, but now I'm just going to put another position on, then overall you may well find this is makes you more profitable overall. It'll bring your win rate down. Why? Because there'll be times whereby, let's use this as an example. Let's say at this point you've got your second entry in. Okay. If you hadn't have put, and let's say it rolls over. So you're now going to end up with a break-even entry of your first and a -1 R on this second entry. If you had have just stuck with your original entry, then you wouldn't have had a -1. You'd have just had a break-even trade. Yeah. And people are like, I just have the break-even trade. Yeah. I'm only interested in an overall profitability. I don't care about win rate. So I will put up with those ones that roll over, knowing full well that in the bigger picture, I'm going to be more profitable having a few of those that roll over and end up not even having a break-even trade. It will actually be a loss. I'll take those losses because I know that those trades that do go all the way will pay for the losses and be more profitable. So that's my attitude towards those. So there you go. Just some food for thought for people who have not looked or considered adding into winning trades. I do not advocate adding into losing trades. That is not what we're talking about here. We're talking about adding into trades as they go in your favor, not adding into trades as they go against you. That's something else entirely. Okay. So at this point, just bear with me. No, I'm still okay here, right? Okay. So at this point, okay, let's bring up the account so we can have a look at the equity. Now, I started this trading challenge 3.5 years ago. I didn't have a relationship with Tickmill at that point, so this challenge account is actually with a different broker, just so you're aware. Okay, it's actually with a different broker. So. Sorry, I'm just clicking stuff around here. So let me bring that up. Where's that gone? That's not it. That's the Zoom meeting. All right. Okay. Just getting it all ready to drag it all across here. So just for the purposes of this exercise, the broker is Saxo Bank, and I've just put this is the screenshot of the report that I'm about to show you. I've just had to take off my address off there. So this is me. My first name actually is Kevin, but everybody calls me Charlie. That's what I like being called, and that's what everyone calls me. And I was christened as that. So. Let's go over to the account summary. So I don't know why I thought it was 573%. It wasn't. It was 571% over that time frame. So let's go and have a look at the chart here of this. So this is just showing you the equity curve of the account from June of 2020 through to the end of December of last year. And you'll see that, yeah, plenty of drawdowns. Plenty of drawdowns, really nice, winning phases here and here, but, some drawdowns here some spikes there, whenever some nice runs up, and then pull back, and then carrying on to new equity highs. So that's when you get these spikes up in the equity is when I've been in a lovely profitable position, and then the market just reverses against me. So you'll see it a little bit clearer here. Is another chart equity here, which shows you, as I said, when I started the challenge in the June of 2020, immediately went into drawdown there. So, but then from then onwards, so this is just where I am above zero or below zero. So it never went back below zero, and ultimately ended up with that return there. And so, yeah, so, I mean, this is what I call, this is aggressive. This isn't, I don't trade with this amount of aggression on my my main account. So Kamal, good point, Kamal, has asked, what risk per trade are you using? On this, now, I have to emphasize this is a trading challenge. It's a speculative trading challenge. So I will risk up to 2% of the account balance on a trade, okay? So I don't a lot of the time, but I allow myself to do it if I want to. So up to 2%. A lot of the trades actually start off at 0.5% or 1% risk. Then I might then add to them. So I might still then add to them, but then I'm trading the stops up as well. But yes, I can do 2% at risk per trade. I wouldn't trade at 2% risk per trade on my main account. I trade substantially lower than that. I think that as you get older, or if you're trading on larger capital, you don't want the volatility of in your returns. So I don't want the higher volatility potential that comes with trading 1-2% risk per trade. So on my main accounts. So this is a speculative challenge. Okay. So that's really the main stats there. The rest is just going through and just showing the costs and the overnight fees and stuff like that. So that's in the main the performance there on the challenge, and where I've got to date. So what the continued goal of this challenge is, I will continue it. I'm going to carry on with this. So the account had got to, by the end of last year, I think about £128,000. So it started on 20,000. And as of when I did, as I said, when I did that update webinar, it was on 128,000. That's taken 3.5 years to get to there. I'm going to carry on trading this, like I've said at the beginning of tonight's webinar. So I'll carry on trading this until, well, I don't know, until I get bored, I guess, or, but we'll just see how it goes. And that's what I said at the beginning when I started it on 20,000. We'll see how it goes. Can I get it to 70,000? Once I got it to 70, I thought, well, I might as well carry on. And then we'll just see from there onwards. And that's exactly where I'm at the moment. So every year, at the end of the year in December, I do an update on it. I'll do an update December for Tickmill as well. I do it on my YouTube channel, but I will do that then as well. Okay. Yes, I'm just having a quick look at the questions here. Do negative overnight charges swaps account for any part of your long-term trades? Yes, yes, of course. For instance, would you normally stick to positive swap trades? Right, good question from Paul there. The short answer is no. I don't only trade positive swap trades. It's lovely when they come along. So during 2022, 21 and 22, when I was shorting the euro overall, then, of course, I was receiving the swaps there. But you can have some lovely trade setups where you're paying swaps. I'm not going to, I don't begrudge paying swap fees. They're pretty small relative to the profits that you generate, Paul. So I don't worry about them too much. Of course, would I get into a long and try and hold on to a long for a year in the euro dollar? Probably not, because the swaps are going to build. But up to 3 months, it's okay. It's all right. Yeah, they are still gonna build to an extent, but I'm comfortable with that. So now, bearing in mind, Paul, I'm trading euro dollar. Would I do something like that and go against the swaps on something like the dollar yen? Probably not, because if you were shorting the dollar against the yen because of the interest rate differential being that much bigger, then your swaps are going to be that much wider. So, of course, it does depend on the currency pair that you're trading. I'm trading euro dollar. The interest rate differential isn't too bad. And so, yeah, I just put up with paying the swaps. I'm not too fussed. Hopefully that answers your question there. Good. Yeah. Okay. Ricardo, sorry, coming back to Ricardo, said the problem is the survival rate of the positions added. This is in talking about adding into positions. Yes, it's a valid point. When you're adding into positions, then as price rolls back over, the most recent positions you may have added may well get stopped out. Absolutely, but that's what I was saying with adding into trades. You have to put up with the stop outs as well. Right. Jose is talking about, can you go deeper into multi-time frame analysis? Yes. Okay, I will. I can see your questions coming through, and I will answer your questions. If people have got questions, by all means, yeah, now's a good time to be asking. So if I come out to a quarterly chart, first of all, what I'm just doing the basics here, Jose, of technical analysis. So what I'll do is if I put my trend lines on now, which I've had off all night, you'll see that this is going way back here on the euro dollar. You can see that I've got this major trend channel here. I've got also on this a major trend line from the highs of 2008 coming through the highs of 2021 there. So that dotted trend line. Plus I've got some more localized small time frame trend lines at the moment, and some horizontal levels on the chart as well. One at 114, one down at 110 as well. So what I'll do is I'll take a high time frame first of all, quarterly chart, and then just look for horizontal support, resistance, and trend lines or channels if they are there. So then what I'll do is I'll then take a read on all of that. Okay. Now, and I'll look at things like divergences as well. So the euro, for example, on the quarterly chart has been diverging since it made its lows here in 2017. It made that low down to the low of, the divergence only emerged in 2022, down the low of late September of 2022. We got this divergence down here as well. So guess what have I been doing since late 2022? In the main, been mostly on the long side of the euro dollar. We hit that major level, as I talked about earlier on. We're diverging down here. We had all that negative sentiment down there. And so in the main, hence why since late 2022, I've been generally taking more long side trades than short side trades. And so I'll start off with that template there. That gives me my overall template. Then I'll come down to the monthly chart and see if there's anything. Because when you zoom in, you sometimes see a little bit more on the monthly chart. So again, I'm looking for where price may gravitate towards. This sloping trend line, I think, is a really interesting level. This long-term sloping trend line that commenced back in 2008. Simple stuff, but I'll get a read of where price is relative to trend lines, support resistance, and key moving averages as well. So key moving averages like the 50 period moving average, 200 period moving average, I'll use in the analysis as well. And so hopefully I'm just giving you a bit of a a taster on just what I'm doing. So I'm starting out on the higher time frames, then working my way down, all the way down to the weeklies and the dailies. So let me give you an example at the moment. Here's a lovely pattern. I love this pattern on the weekly charts at the moment. So if I zoom in a little bit here, 110. Okay. This level here, price came up into the beginning or early 2023, hit 110, reacted. No one was surprised there. Big psychological round number level, 110. In fact, I was probably shorting there or a bit after. I definitely banked profits on my longs that I was in at that time. Anyway, then it comes back up to 110 again, and it attacks it. Bear in mind, this is a weekly chart. So on the daily charts, lots of chop around that 110. Backs off. Comes up to it again. Backs off. Then breaks through. Which ultimately becomes, that's last July. That became effectively a false breakout. We then had this 3-month pullback. Took out the last lows in the prior sequence moving up. Back down here. Then did what? Came back up to 110. Did a pullback. Back up to 110 again. Got through it a little bit. Little mini false break. And then pulled back again. Well, the way that I'm looking at this chart, this is just the way that I'll interpret this, is that we've had multiple tests of 110. We've taken out these last rising higher lows here. A successful retake or taking out of those higher lows, only to then come back up again. Then we've pulled back again at the moment, but it's relatively small at the moment. So if we get back up to 110 again, I'll be highly bullish for a breakout of 110. I see this as all just building towards ultimately, if price comes back up to it, a breakout. So there you go, answering that question there. You know, what do I do? And then it's just a case of then just coming down. I won't be waiting for a breakout on the weekly time frame. This is all part of the analysis. Then I'll be using, you know, whatever I'll be using at the time. If the euro was to go up to, 110, then I'll be using entry techniques at that time to get me in around that area. So still got a bit of work to do up there, but yeah, absolutely. But you can start to get an idea of, oh, okay, he's using that big time frame analysis, is saying divergence on the quarterly chart. So he's still looking for more upside. Then we got the patterns there on the weekly chart, all around this, false breaks of and multiple tests of 110. Ah, okay. So this is how he's putting it all together. Every chart's different, but these are all the techniques that I use. And so I use a lot of analysis techniques to get me in. Okay, hopefully I've answered a little bit of that question there from Jose. Thanyani has asked, are you strictly technical, fundamental, or both? No, as I said at the beginning of the presentation, I'm using the fundamentals as well. So as an example where I might use the fundamentals is if I take this now down to a daily chart. A classic example of using the fundamentals is classic example is this day here. Okay, that's what I was looking for. This day here. So this was back in early October of last year. It was a volatile day. That was non-farm payrolls day. Non-farm payrolls came out really high on that day. You can go back and look and see what the numbers were. The non-farm payroll headline number came out really high. Came out like 300,000 jobs created or something like that. So the euro dollar should have gone down on the day, and it did intraday. By the end of the day, though, it came all the way back up. So that's a classic example of when I'll take something from a macro perspective, like i.e. just on this occasion, just a piece of news. And if the market doesn't want to go where one might think it should go based on that news, you've got to read the price action. So that's something that I'll use as well. But overall, do I use the fundamentals? Yes and no. So right now, I know, like most of you know, that if you look at Europe versus the USA, which is the stronger economy? Well, the USA. Okay. How would you have got on with that if that, since October of last year, if you'd have been, selling the euro dollar back down here because the euro is, the eurozone is underperforming the US. Well, it wouldn't really have worked for you because the euro has actually been appreciating, or certainly into December. Then we've had this pullback since then, admittedly, but we're not at new lows or anything like that. So I think it's important to be very familiar with the fundamentals, especially the news releases that are coming out on a weekly basis. Really important at interpreting how the market price action is moving in relation to that news. But I have to take with a pinch of salt the overall fundamentals. For example, when I've now zoomed out to that October of 2022, do you think the fundamentals at that time supported being long the euro dollar? No, they did not. So sentiment was pessimistic. The fundamentals favored the dollar against the euro. But there are always going to be times when there's going to be not just reversals, but big reversals. I'm not looking for reversal all the time. That whole period I was, taking lots of shorts and riding this trend. But there are times when price gets into key levels, like I went through earlier, when you have to take notice of it. So fundamentals, yes, but not all of the time, is my point there. Okay. Do you look at technical levels as targets, like previous highs and lows, or certain price levels? Kamal, well, yes to all of that. In the main, I am the targets I'm using are usually prior highs or prior lows. Yes, but they may well be, like I just hinted, went through when I was doing the top-down analysis bit. It may be a trend line or something like that as well. So I will use trend lines or channels as targets at times, or a key moving average as well. So I use a variety of levels. What I'm then looking for is overlaps between, technical prior price level, which may be overlapping with a historical trend line or horizontal support resistance as well, or even a moving average. So then I'm looking to overlap. Yes. The initial equity on it was 20,000. Yes, on the challenge there. Up to how many pairs do you tend to trade at once? One, Aidan. Actually, that's a slight fib. I will trade up to four pairs. But the reason I said one is because the majority of the time I'm not. I'm in one trade at a time, one market, should I say, at a time. Sometimes, there are times during 2023 where I'd be in two different pairs, and I think there was a point where I was in three different markets, but maximum usually of four for me. But most of the time, I'm just in the euro by itself. Sometimes I might be in the euro, plus I might be trading the S&P at the same time. And sometimes I might trade and be in an antipodean as well, like the Aussie dollar or the New Zealand dollar. So I do it, but I'm not in a lot at any one time. Most of the time, I'm in one, maybe two, but more often than not, 80% plus of the time, I'm only in one pair, and then looking to add to it and build to it. Well, I've got another question here. Where do you start and use outlets, index movement? I always find this start daunting. I'm trying to think what the other question was there. Oh, okay. Where do you start? Start with the charts. I always start with the charts, Fanyani. So I always start with the top-down approach to give myself a chart that I actually even like. You know, I like the euro dollar. I've been analyzing this thing for years and years and years. So much like most of the major currencies, I look at them all. It's really important to do intermarket analysis as well. It's not just looking at the euro. I do want to see where what the Aussie's doing, what the pound dollar's doing, what the Kiwi dollar's doing, dollar yen. You know, I'm trying to put it all together. But yeah, the top-down approach, technical approach first, and then you'll just start to get better at the sentiment side of things. I look at COT reports, I look at what retail traders are doing, and I do scour around for, you know, when we're getting to extremes, as I've shown some articles there tonight. But usually there's not going to be extremes in sentiment when there's not been what? A trend. So if there's been a bit of a trend for over, you know, several months, that's when you start having a look. So right now, there won't be any extremes in the euro dollar at the moment, or as far as sentiment is concerned at the moment, because it's not really been doing that much in relative terms. So you'll get better at that. You'll get better at that. That's what I do. Do I have YouTube videos teaching my analysis? I do have a YouTube channel, yes. Most of the YouTube channel videos are mindset related. But by all means, check them out, yeah. What are your exit strategies? William, I think I've already sort of covered that off. I'm looking at prior highs, prior lows, trend lines, all of that sort of stuff is basic stuff. I'm just looking for overlaps with them, yeah. So like I went through when I just put all my trend lines on, if I come back out, if the euro breaks through that 110, this is onto a monthly chart. Maybe I take this back to, bear with me a second. If I take this back to a weekly chart, there we go. So if the euro breaks through the 110 and then I'm in long positions, what am I going to be targeting? I already know what I'm going to be targeting. It's this overlap here between this long-term trend line, this declining dotted trend line, which I've already shown you goes back to those highs of 2008, and this 114 zone, because this 114 zone is a nice historical level there against these highs, but it goes way back. Look, high of early 2020, the COVID high. Then we had all of this price action for it back here, and I can keep going back all the way back in 2015, 16. So that 114, now, if I bring us back again, you can now see, oh, right, significant level. Overlaying with a declining trend line, right. Oh, that's going to be a target zone. Yeah. What do I think about prop trading accounts? I think you mean the funded account type stuff. I'm not really a fan. Most of them, they're great businesses for them. Have a normal broker and make your money the traditional way. You know, they're great. They're brilliant marketeers. But in the main, the amount of people that I've come across who have said, yeah, do you know what? I did it. I spent a load of money on challenges. Even when I passed, then I found that they were moving this, widening the spreads on me after a period. Once I was making a bit of money, even the people that do make money, which is very few, all of these sorts of shenanigans were going on. So in the main, I'd say no, have a brokerage account, trade your own money. Do you use fibs? Yes, I do, David Suarez. At times I will put fibs on. I'm not using fibs every day or every week, but when I identify a really nice run in a market, I will put fibs on to see where the retracement levels may come in as well, as far as Fibonacci is concerned. Yes. Do you have any live trading days? It would be quite boring, Ollie, because I don't intraday trade anymore. But but I'm always in the market. I'm very rarely, in the 365 days of the year, I'm very rarely flat. I spend most of the year in positions. So yes, I'm always either looking to add to positions that I'm already in, or initiate a new entries. So yes, I am in. I'm pretty active. Yeah. Where do I think the best information for learning? Check me out. Just Aidan, just Google me, and you can get in touch and just Google me. Yeah. Uh, how would I advise a beginner scalper? Don't do it, Lebo, would be my advice there. Simple. The reason I say that is because for very short-term trading like that, if you're a beginner trader, then you haven't built the emotional resilience to the markets. You're going to be way too emotional towards it. You'll just end up losing money. Doesn't matter what your strategy is. Even if you find something you think is good, the market will get you anyway emotionally. So you're not ready for it. So I wouldn't recommend it. There you go. That's a real direct advice, isn't it? Use EMAs in your trading. You use SMAs. What's the difference and why? Jolita. Yeah. Exponential moving averages weight the more recent data. So if you had for example, a 50-day moving average and it was an EMA, then it's exponentially weighted to, I don't know, to what, let's say the last 10 periods within that 50 period moving average. There's a bit more of a higher weighting to the more recent periods. So what that means is the moving averages will move more aggressively along with price. A simple moving average doesn't do that. It's simple. That's the difference between the two. There are reasons why I use a simple moving average over and above an exponential. One such reason is, I'll tell you, sometimes you get a situation whereby price has done a pullback. So price maybe is in a move, in an oval trend, and it does a bit of a pullback, and it slices through something like I use a 20 period moving average. You could use a 21. I know a lot of people use a fib number, use a 21. But it's coming to a nice support zone down here. Oops. It's coming to a really nice support level here. And I often say the moving averages leave clues. The 20, if it's still facing upwards, it's a clue that, yeah, there's a high likelihood that price will bounce back up to the moving average itself. So it gives me a really nice heads up at times. Oh, we've come down into a support and the 20 is still facing up. I'll use it with the 50 as well, but it doesn't happen as much with the 50. But it does happen with it. So I want to use an SMA. If I had a 20 exponential moving average, it would have just moved over and I never would have seen that pattern. So for me, I prefer SMAs. Raw account or standard account for trading? Yeah, Iqbal. If you are intraday trading, then probably a raw account would give you an edge. A raw account isn't worth it, I don't think, if you are swing trading. So if you are sort of scalping, very short-term intraday trading, then probably a raw account. Otherwise, just a standard account would be, I would say, yeah, no need to pay the extra costs. Thanyani, I did answer your question. You'll have to get hold of the recording. Yeah. Just get in touch with Tickmill, or Tickmill will be getting in touch with you anyway. And so, but otherwise, if you don't want to wait, get in touch with them and ask them for tonight's recording. Please explain the major key level support and resistance zone. So I've already done that, so I might come back to it. I've already supply and demand zone you're talking about there, but yeah, support and resistance. I'll come back to that because I've already just gone through an element of that on this chart anyway. Cecilia, hello Charlie. Do you use VWAP and wood and anchored VWAP? No, I don't. that may be more appropriate for very short-term trading, Cecilia. But as I'm swing trading, then no, I don't. But maybe you can still use it for my trading. But there's only so much you can use. And so if I put too many overlays on, there'd be times when VWAP might be useful to me, and there'll be other times when it's no use whatsoever. So you have to, I've looked at most methods in trading over my 27 years and had to decide what I like, what I don't like. Trading's a very personal thing. So I could add, and I do use a lot of techniques. I'm kept things fairly high level here this evening, but something like VWAP or many other techniques are absolutely fine. But what they would probably do for me is sometimes they might be useful, then other times they might keep me out of a trade that actually ends up being a brilliant trade. So I'd rather not bother. So hopefully that answers your question, but nothing wrong with it. It's just personal. As a trader, you can't use everything. You have to just use what you like. Yeah. Loads of questions coming through still here at the moment. I'm happy to keep going. What do you think about grid trading and trade analysis? I mean, the direction of the trend with dollar stop loss and dollar take profit. I don't know anything about that, Ali, so I can't really help you there. That never heard of it. So obviously it is something, but it's not something that I've ever looked at or come across. Yeah, sorry, can't help you there. How long did it take you to get your mindset comfortable with drawdown periods? Yeah, good question, Kamal. I think probably a more important one is, how long did it take my mindset to get used to just trading? And I would say about 2.5 years. The first 2.5 years, it took that long to get me used to the ups and downs and trying to get on top of my discipline in that 2.5 years there. So I would say that was the case. But as far as getting comfortable with drawdown periods, it would have no doubt it would have taken longer than that, because although you can get to a point where you're successful and profitable as a trader, but to get truly comfortable with drawdown periods takes years and years and years. And it's constant work in getting used to that. As an example, I had my biggest drawdown ever in 2018. I was 20 years or more into my trade, over 20 years into my trading at that point, and then I've just had my biggest ever drawdown. Now, psychologically, I'm at that point fine for it, but it's still, to someone who might only be 5 years into their trading, that might be a real challenge, So it does take years and years of just working on your mindset to get more comfortable with it. One of the best things that you have is experience. The more times you have a drawdown and then you trade out of the drawdown, it adds to that experience of, okay, I've been here before. When the next drawdown comes, and then the next one, you've been there before. And so yeah. Instead of the ATR being to determine the stop loss, can the MACD be used to determine the stop loss in any way? I don't know. I don't use an ATR anyway to determine stop losses, but that's fine to use, but I don't personally. But could you use the MACD to determine? Not that I know of. I've not really thought of that. I've never come across that. Nanla? Sorry, I've probably not pronounced your name very well. So I've never come across it. So I don't think so, though. No, I would rather you base your stop loss based on the price itself, not on an indicator. How many instruments do you trade? Your next question, when is the best time to enter a trade? I've skipped that because there is no best single time to enter a trade. That's why I'm not bothering to answer that, because any time can be a reasonable time to enter a trade. What's important is the setup, is what the setup you're using. not anything about the time. How many instruments do you trade? Tony, you've obviously come in a bit late. Over 90% of the time I'm trading the euro dollar, Tony. So over 90% of the time. I do trade stock indices, S&P, NASDAQ, Dow at times, and I do trade other major currency pairs as well. But 90% plus of my trading is euro dollar. Just personal choice. It's the biggest currency pair, and I'm quite happy trading it. I'm in positions a lot of the time through the year. So, yeah. Okay, I think we are about there. And I'm very conscious that we're an hour and a half into this webinar here tonight. So if anyone's got any more questions, by all means, do quickly write them down. I can carry on, but otherwise, we're getting close to the end here. Again, very thankful to Tickmill for organising the webinar here tonight, and I'll be back to do another one, I'm sure, fairly soon. I've done a few for Tickmill now through last year. So by all means, if you want some more technical ones, I've done some previous technical ones with Tickmill in 2023. So if you are in touch with them, ask them for some of the other webinars I've done as well. But otherwise, I will certainly be back at some point in the next couple of months to do another one. But let's just see if any other questions before we wrap this up properly. Do you think trading will be more regulated in the UK? Yes, I do. Kamal, yeah, I do. I think that not just in the UK, I think in Europe and Australia and New Zealand. So I think that trading in 10 years time will be different to what it is right now. And so across the board, the regulators, it will become more regulated. Why do I think that? This is I could spend a half an hour on that subject, but the bottom line is we live in a world whereby governments don't want people going out gambling, whether they're betting on horses or races or sports or whatever. It's allowed, but they try to regulate it. And it's the same with financial trading. What they don't want is loads of people out there. A government doesn't want its citizens, too many of its citizens, going out there and losing loads of money in sports betting or financial trading even. So I have no doubt that they will impose more regulations. You'll still be able to trade, but there'll be more regulations in the future to stop newer traders in 10 years time. Whether a new trader will be able to, if they're based in the UK or Europe in 10 years time, whether they'll even be able to trade or not, I don't know. I don't know. I'm just speculating there, but it wouldn't surprise me that regulations to an extent get, to some degree or another anyway, get tighter in 10 years time. Thanks, David. For a beginner, which is better between an EMA and an SMA? Well, Lebo, I'm going to be biased and I'm going to say an SMA because that's what I use as I went through that. Do you think regulators will ban automated bots on MT4 and MT5 in the coming years, or platforms that allow AI trading? Maybe on that one. Will they ban automated bots? I don't know. If it's something you've created yourself, I don't know. There's plenty. I guess there must be so many automated bots that just go and massively overtrade and just blow people's accounts up. I think that's what you're probably referring to. So yes, I'm sure they'll want to come down on that sort of stuff as much as they can. Yes, I'm sure. But there's lots of automated bots that are good, so as well. So, but yeah, trying to reduce the leverage, the exposure, then yes, I'm sure they'll probably try and do that. Yeah, at some point. Is there any ECN broker well, just use Tickmill. Tickmill are still an ECN broker, are they not? So I'd say Tickmill. Thank you for your time. Thank you. Have I missed anyone here? Strategic asset allocation or technical asset allocation? Oh, I don't know the answer to that one because I don't quite understand the question. So on that one, so sorry, I don't quite understand your question there. Bearing in mind, I mean, you're talking about asset allocation, so you're now talking about having a portfolio. I'm talking about trading here, trading financial instruments using the likes of futures contracts or CFDs for FX. So asset allocation per se isn't important when it comes to those. Using risk management is important. So if you've got $10,000 in a trading account, you should only risk a very small percentage on any one given trade. So it's a bit different to asset allocation because that's when really we're talking about having a portfolio. Yeah. Right. Okay. I think we're about there. I've seen lots of thank yous. So that's really very kind of you. Thank you for coming along and spending your time with me here this evening. And hopefully it's given you some food for thought right from the beginning. And I know you so quickly will forget stuff. So I do encourage you to get the recording. They won't have the recording until probably tomorrow. But I would encourage you to get the recording because there's bits in this that you may forget. So, yes. But thank you so much for coming along tonight. And hopefully I'll see you again soon.